Coming up in this episode, we're going to be taking a look at the Money Charity Report from February 24, which will give us an indication of the UK's household finances. We're also going to be taking a look at the Zoopla House Price Index, the UK Monthly Property Transactions Report, and the Nationwide House Price Index. As always, we will also be taking a look at the latest swap rate chart, the latest lender rate changes, and the latest lender criteria changes. Hello everybody, and welcome to the UK Mortgage Market Insights for the week ending the 1st of March 2024. I hope you're all well. So first up, I'm going to take a look at the Money Charity Report that was produced for February 2024. This is a PowerPoint presentation, so I'm not going to go through it on screen with you. I will put a link to it below, so please do go take a look at it. I'm just going to pull out some key numbers from it for you. So according to the FCA, at the end of Q3 2023, there were just over 175,000 mortgage accounts in arrears of more than 1.5% of the loan amount, and this is an increase of 5.1% over the previous quarter. UK Finance reports that just under 94,000, or 1.07% of homeowner mortgages had arrears equivalent to 2.5% of the mortgage amount in Q4 of 2023, and this is a 7% increase on the previous quarter. Repossessions were down to 540 in the quarter from 567 in the same quarter a year ago, so 2022, and this is the equivalent of 5.7 properties per day being repossessed. So like I said, there is a lot more information in this report, so please go take a look at it yourselves. But these key bits of information that I've just pulled out, to me, show the difficulty that households have been facing now that we're in a higher interest rate environment, along with the cost of living crisis, amongst other things. And when we consider the fact that there's about another 1 million people this year coming off low fixed rates, it would seem that this situation is possibly going to get a little bit worse over the coming months, but we will keep you posted. So next up, I want to take a quick look at the Zoopla House Price Index that was released this month. Now, as you all know, generally speaking, I take the Zoopla House Price Index with a pinch of salt, but as I said in one of my daily videos, I do think that this report is actually quite unbiased this time round, and it's got a lot of data in it. So right from the offset, Zoopla were reporting that the housing market continues to recover, with house price falls steadying and 15% more property sales than this time last year. If we scroll down slightly, you can see the key figures where we're talking about the different property values. It covers off all the different types of property, but in general, all property average house price in January 2024 is £263,600. Year on year, this is a 0.5% decrease in house values. So not that bad at all. You could almost say that house prices have remained very stable over the course of 2023, despite all the turmoil that we saw. Scrolling down a little bit further, the report goes on to say that house prices are falling in 5 regions and they're rising in 7 regions. And it also says that house price falls are slow amidst rising sale numbers. Moving down further to some key facts for you, we can see that there is an 11% uplift in buyer demand, 21% more homes for sale, and there are fewer asking price reductions, but they do remain above average. Now, there is a lot of information in this report, so I'm not going to go through it in detail. Again, as always, there is a link to it below, so you can go and take a look yourself, and I'd be interested to hear your thoughts and comments once you've had a read of the report. But in essence, what this is saying is that the picture is improving for the housing market in the UK. It goes to show that this higher interest rate environment that we're seeing, so interest rates of 4 to 5%, they're not proving as much of a barrier as they were previously, so people are actually getting used to the idea that interest rates are now going to be higher going forwards. But the UK is still adjusting to these higher prices. So for this year, I think it is going to be a more positive market. We have an upcoming budget. Interest rates are set to potentially reduce, which means the outlook is a bit more positive. But I don't expect that we're going to see any significant increases in property values. I think by the end of this year, we'll probably still see values around about the same as they are now. But let's keep our fingers crossed, and we will keep a close eye on it for you. Next up, I'm just going to take a very brief look at the UK Monthly Property Transaction Report. Again, this is a really in-depth report, so I will put a link to it below, and I just want to pull out just a couple of figures for you. So as you can see on screen, there are some seasonally adjusted and non-seasonally adjusted numbers. I'm going to focus on the non-seasonally adjusted figures because I think they show a truer picture in my opinion. So as we can see, the provisional non-seasonally adjusted estimate of the number of UK residential transactions in January 2024 is 68,090. This is 10% lower than a year ago and 20% lower than a month ago. Now, these numbers are quite staggering and they do show a downward trend in property transactions. However, we've got to remember, it's been the Christmas period. December and January do tend to be slower anyway, so I'm not surprised that these figures are down. And of course, we also need to remember that last year was a terrible year for interest rate and all of the turmoil that we saw with the cost of living crisis. So it's not surprising that people were putting off property purchasing. However, things now do seem to be improving slowly, and the feeling is that rates will drop, and with potential assistance coming up in the budget, it should prove to be a more positive year. Now, I was also asked for my comments by the media, and I was lucky enough to feature in the Daily Express. So as we can see on screen, property transactions hit the lowest level for January in 11 years in a blow to the market. It is obviously a headline grabbing story because, yes, the numbers were lower, but there is a story behind it, as I've just explained. If we go on to see further down here, we've got my comments. I said that the numbers show the level of uncertainty in the property market, which is absolutely correct, specifically linking it to the higher interest rate environment that we saw. However, sentiment does seem to be improving and inquiries are increasing, although the recent rate turmoil that we've seen over the last couple of weeks that I've been reporting has scuppered things slightly. But as I say, let's hope that Jeremy Hunt in the budget next week pulls the proverbial Easter bunny out of the hat and surprises us all with some incentive that are too good to refuse. A rate cut from the Bank of England would obviously also be very appealing. So overall, property transactions down. There is a good reason for it, as we all know, and I would imagine expected. But things are improving, and I do believe, honestly, that 2024 is set to be a more positive year. So next up, let's just take a quick look at the latest swap rate chart from yesterday evening. And as we can see on screen, there were some slight decreases yesterday, indicated by the little red arrows pointing downward. But if we scroll down here, we can see that we are still sitting considerably higher than we were a month ago when we consider it. For example, if we look at the 2-year rate and if we look at the 5-year rate. So about 0.3 to 0.5% higher than we were a month ago, which is obviously an indication as to why we are still seeing lenders increasing their interest rates at the moment. So next up, let's take a look at the latest lender rate changes, followed swiftly by the latest lender criteria changes. So first up this week on the rate changes, we've had Quantum increasing all of their mortgage rates, Coventry Building Society increasing all new borrower fixed rates, Generation Home have increased their rates, as have Aldermore. Skipton Building Society 5-year fixed rates are increasing for new and existing borrowers, and Nationwide are increasing some selected fixed rate product. Virgin have made some small increases to a selection of their fixed rates, and Halifax, as reported in one of the daily videos on my other social media channels, are increasing rates with some very slight reductions on some remortgage products at 90%. But that was a lead story last week where they were going against the grain and decreasing their rates. Now they've actually gone back and increased their rate. Birmingham Midshires are also reducing selected product transfer rates, which is good news for existing borrowers. Precise are increasing their rates, and Accord are also increasing their product transfer rates. On criteria changes, we've got the Nationwide. They've increased the maximum loan to value limit for like-for-like remortgages up to 95% loan to value. Santander have increased the maximum loan to value to 95% for new build houses and flats, which is great news. And Aldermore have made improvements to self-employed lending limit and also increasing their allowable income. Both of these are positive changes, meaning that there's more help available to more customers. Just very quickly, I have got a breaking news story for you, which you'll need to keep an eye on the press today about this one, because it is breaking news and I haven't got any more detail at the moment. But I don't know if you recall, but we were talking about a scheme that was potentially going to be launched by the government and Jeremy Hunt in the spring budget. Talk of a 99% mortgage, a 1% deposit. It was going to be a government-backed scheme. Mortgage brokers across the UK were absolutely slating this scheme, saying it was a really bad idea. And lenders were also agreeing with us, saying that it wasn't great news. It would actually have dire consequences on the housing market. Reports are coming out this morning that this scheme has been scrapped. It's not going to go ahead. But like I say, this is a breaking news story. I don't know anything else about it at this stage, So please do keep an eye on the press today for that one. So coming on to the nationwide house price index, which has literally just been released. It is now 7 a.m. on Friday the 1st of March. If we take a look on screen, I'm going through this with you live because it has only just dropped. Annual house price growth returns to positive territory for the first time in over a year in February. UK house prices rose 0.7% month on month in February. An annual rate of change returned to positive territory for the first time since January 2023. Prices up 1.2% year on year. I will put a link to this report below so that you can go and take a look at it yourselves. But the Nationwide's chief economist Robert Gardner, he commented, UK house prices rose by 0.7% in February after taking into account seasonal effects. This resulted in an improvement in the annual rate of house price growth to 1.2% in February from a negative 0.2% the previous month. House prices are now around 3% below the all-time highs recorded in the summer of 2022 after taking account of seasonal effects. The report does go on to say signs of easing in affordability pressures, which I've already covered off when we spoke about the Zoopla House Price Index. It does appear that people are now getting used to this higher interest rate environment. So positive signs from the Nationwide. Just as a reminder, Nationwide and Halifax data is bang up to date information based upon their own customers who are applying for mortgages. So it does give you a real live indication of what is happening on the ground right now in the UK with house prices. But I'd love to hear your thoughts and comments below. Are house prices increasing in your area, or are they staying the same, or even potentially dropping? Please do let me know in the comments below. And so that brings us to the end of this week's episode. So thank you for staying tuned. If you're still here watching, I do appreciate it. As always, thanks for your support in the channel. I'm hoping that you find the information useful. That's certainly the feedback that I'm getting from people. If you haven't, please do consider subscribing because it really does help the channel. And we are trying to grow it to be the point of information and reference for everybody that has an interest in the UK property market. We're trying to encompass everything that's gone on in the previous week into one snapshot video. So please, if you haven't subscribed, please do, and please do consider sharing it and giving me a thumbs up. That would be appreciated. Hope you have a great weekend. Please take care, and I'll see you next week. All the best.